Hey, it's Kevin Wright here, back again with another property finance tip. And this week I'm going to answer a question that I get asked an awful lot. People say to me, Kevin, what's the best way to fund refurbs? So if that's an interesting question for you, stick around. So, refurbs. Well, you know, if you're doing buy, refurb, refinance, often known as BRR, or if you're doing buy, refurb, sell, not so commonly known as BRS, but I guess that it still applies. But what's the common denominator between both of those? Well, of course, buying it, but refurb. So taking a property in varying degrees of a poor condition and then improving it, bringing it up to standard, and then either refinancing it to rent it out or maybe to sell it on, to flip it and make a profit, bank the cash. And of course, banking the cash is never a bad outcome, is it? So the question is, what is the best way to fund these refurbs? Well, it kind of depends on your situation really, but you've got cash, certainly, you've got unsecured borrowing, or you've got secured borrowing. So let's dig a little bit deeper into each of those areas. Let's take cash first of all. Well, you know, if you've got your own cash, brilliant. Because the great thing about using cash, zero borrowing costs. So you're not going to charge yourself interest, are you? But if you haven't got your own cash, cash can still work. It can be someone else's cash, of course. So borrow it from people you know. Now, people you know may well lend you the money. It could be a matter of weeks. I mean, you don't need it for a couple of years, do you? Just to do a refurb, and then either pay them back out of the refinance or the sale. So literally, it's for a few weeks, no more than a few months. So if you know someone that can lend you that, maybe you're going to do it on a fixed rate of interest. That would be the most common way to do it. So you just you can do it informally or formally, depending on how well you know them. I mean, you may not want a legal agreement with members of your family, but outside of that, you would probably be advised to. So cash, yours, someone else's. That's usually a pretty cost-effective way to do it. If the cash option isn't open to you, well, you can go down the unsecured route, and that's typically getting something like a personal loan. Now, personal loan you're not going to get over a period of a few months. You can take it over a longer period, and it probably makes sense to do that because if you're going to be doing multiple refurbs, you should be able to use that money on refurb after refurb after refurb. Now, the ability to get personal loans is going to depend on you having decent credit. If you've got decent credit, that's an option. If your credit maybe has seen better days, then that could be a barrier to using that option. So you're back to trying to find cash as the option, again, if you haven't got it yourself. But now let's look at the secured option. So what ways can you do that? Well, if you've got a mortgage on a property and you've had that mortgage for at least 6 months, you could potentially look to get a further advance. The problem you've got there is that your loan to value could be too high to do that. Now, it's a chicken and egg situation because clearly if you're going to do a refurb on the property that you've owned for more than a few months, then you're going to increase the value. But lenders won't lend on the increased value because the increased value doesn't actually exist yet. It's in your head. And of course, the other factor is that the rental income of a property has got to be big enough to support extra borrowing. So sometimes that can be a barrier too. Check out with your broker to see whether that's viable or not, or check it out with us. See whether we think it's viable or not. Now, if you're doing the buy, refurb, refinance, or buy, refurb, sell, then check on one of more of my other videos why using a mortgage to purchase it is a problem, because you're contravening mortgage lenders' terms and conditions. So if you're doing a buy, refurb, sell or buy, refurb, refinance, then the buy part should either be cash or bridging. So let's talk about bridging now. So if you want to fund the refurb, but you want to wrap that up in a bridging loan, then that is a refurb bridge. Check out my video, The 5 Types of Bridging, where I go into detail about the refurb bridge, more detail. So typically it would be 70 or possibly 75% of the purchase price plus 100% of the refurb cost. For bigger refurbs, it'll be in stages, and those stages will be paid out in arrears, which means you've got to do a chunk of the work first, then the valuer will come back out, sign off your work, check it all out, and then you get another tranche of money released from the bridger to yourself. And if there's 3 or 4 tranches on bigger refurbs, then that process repeats itself. So a refurb bridge, is a great way to fund 100% of the bridging costs, and we've brokered a number of those types of bridging loan. So there you have it, the main ways that people fund refurbs for their projects. If you found this useful, hey, have a browse around some of the other videos I've got. There's a bundle of them on here, so there's enough to keep you busy for hours on end if you feel like a binge watch. Hey, have you subscribed yet? If not, click that button and press that dingy belly thing, because that will send you an alert whenever I've released a video. And hang around a minute before you rush off, because I've just got something else I want to share with you. If you enjoyed watching this video, did you know every Monday morning at 8:30 I do a live Facebook Q&A. So if you want to start the week with checking out some answers to your property finance questions, click the link here.